All right, so today is July 7th, 2022, and this is a recap of my trading today on gold USD. And so I want to start by, as usual, marking the 8:30 opening. And also marking opening price at 12 a.m. And I am also going to be marking the 12 a.m. Well, actually 12 p.m. And I'm going to be talking about the trades that took place today. So, if we look at the 8:30 opening, we can see that just like yesterday, if we go back to yesterday, we had relatively equal lows during London session that got taken out, and then price rallied, took out some high on this side of the London session, and then reversed. Today, a very similar thing happened. We have London session lows, which I'm gonna mark right here, that were formed, and then 8:30 happened, and those lows got taken out. And so, if we look at the opening of 8:30, which I'm gonna mark right now, make it a little darker. This is the opening, meaning that below opening price, we're in a discount market, and above opening price, we are in a premium market. So, the fact that we took out the lows of London and we went below opening price, our setup is going to be somewhere in this area right here. Or this is where it would be ideal to find a setup at a discount price after taking out the lows. So if we go into the lower time frames, we can see that once price broke below, so this is the graph of liquidity, this move here, we can see that we have a high, a lower high, and then another high. Well, actually, it's a high, a lower low, a lower high, and a lower low. And so we saw market structure shift right here with the break of this candle. And so with the break of this candle, we're going to be looking for a fair value gap within the displacement. So from here to this low right here, we're going to be looking for a fair value gap. It's a little lighter. And if we see here, we can see that within this displacement, we have a fair value gap right here. So I'm gonna mark that real quick. We have a fair value gap right here. And so what happened was, if you go to the 1 minute to see it more clearly, price, so this whole move down is the graph of liquidity, and then we have the market structure shift. Once it broke this high, we're in the 1 minute right now. So once it broke this high, we had a market structure shift. And then on the higher time frames, which was the 2 minute, we saw a fair value gap form. If we go to the 3 minute, we don't see the fair value gap. Well, let me check. Okay, we also do get a fair value gap on the 3 minute. So you could have used the 3 minute or the 2 minute. If you go to the 4 minute, we also had a fair value gap. So that could have also been used. Well, we had a fair value gap, but it was clear, but it was not touched again. For me, the clearest one was the 2 minute fair value gap, which is the one I used today. So we have this fair value gap formed right here. And so if we go back down to well, actually I stayed on the 2 minute. So once I saw the price break above, I looked for the fair value gap, which was this, and we saw that with price went up, and with this candle right here, price managed to go back into that fair value gap. So with that in mind, we would have entered price at the top of the fair value gap right there, set the stop loss right below the low, and the targets, we would have to go into the higher time frames, but we can see one right here, which would have been either this high right here. So first target would have been here, which there would have been liquidity there. Second target would have been here. There would have also been liquidity here. And if we go to the higher time frames, the third place for liquidity would have been this high right here. So we have 1, 2, and 3 potential targets. So as we can see here, price did go all the way up to this third pool of liquidity, and it went up there, took out the buy stops with these wicks, or this is the 15 minutes, so it looks like wicks, but on the if we go to the 5 minute, we have candles there. 2 minute, more candles there. So yeah, price took out the highs here and reversed. And so on the downside, once it reversed, once we knew that price had taken out the liquidity from this high right here with these candles, we could have been in a sell model. And the reason why we could have been in a sell model is because if we look at this trade right here, we have price take out these lows right here with these candles. This is below the liquidity, which is the optimal place to enter, and we are below opening price. And over here it's the complete opposite, but it's the same model. We have price above opening price. This line right here is opening price at 8:30. We are above opening price. We are in the pool of we're above the pool of liquidity that was grabbed. And so now we're in a sell model position. So as we can see here, I did not take the downside move, or I did not trade the downside move, but looking back at price, that could have been another opportunity, since we're just doing a review now of price after the day closes during the morning session. So as we can see here, price went below after taking out the liquidity with this right here, started going down, breaking structure, and as we can see here, it made a high with this right here. It made a high, and after it made that high, it ran down, but that was not a setup. The setup was right here. After it made this low, price came back up, took out this high, so it grabbed the liquidity, the short-term liquidity from this high, and then came back down. And so right now we're in the 1 minute. So what we saw is that this low was formed and then price broke below that low, so that there was market structure shift once this low right here was broken. And so this is the market structure shift, and this is the displacement from this high to that low is the displacement. And so what we're looking for now is a fair value gap within the displacement, which was shown, or which was formed right here on the 1 minute chart. Because if we look at the 2 minute, we don't see a fair value gap after the break of structure, or we could say that it's more clearly visible on the 1 minute chart. It's more defined on the 1 minute chart, which is right here between this candle and this candle. So we have a fair value gap right here, and we can see price broke below that, took a shift of the structure again after taking out the liquidity from this intermediate term high, and price went back up into that fair value gap with this candle right here. So once again, we could have entered at the bottom, because everything just shifts if you're in a sell model, and everything shifts again if you're in a buy model. So at the bottom of the fair value gap, we could have taken we could have set our stop loss up here above the high, or we could have set our stop loss above this candle that got broken for the market structure shift. Either one would have worked fine, assuming we had the right model. But just to be safe, let's just say we put it above that high. And so now we're looking at targets. And for targets, since none of this was formed yet, we're looking at this side of the story. On this side of the story, we have liquidity right here. Let me mark that a little more. We have liquidity right here. We have liquidity right there. And we have liquidity here. And finally, we also have liquidity at the very low at the start of the morning session. So as we can see, it did not reach all the way down. It did not reach all the way down to this low, but it did take out this side of the liquidity, the second lowest point. So to be safe when trading, we could have always just gone for that first pool of liquidity right here, maybe even the second, since they were both so close. But this could have also been a target here, and a target could have also been set here. So potentially initial targets around these areas, partial profits here, and let the rest run all the way down here. And so that's a review today of gold USD. Today is July 7th, 2022. And this has been a recap of the morning session.